uh, oil, I believe that oil will go lower. And with Saudi Arabia sort of blindsiding the world, and I don't blame them. I think perhaps they made a smart decision for themselves. But I think oil, it's very sensitive to a very small difference in supply and demand. You know, it has that roughly 93 million barrels a day that are utilized, and consumed, and supplied. And when it goes over that, and now, you know, it's somewhere like 1.5 million or so barrels changes, where the supply is high, is high by that amount, it wreaks havoc on the stock. But I don't think that will continue. I think that the supply, by definition, almost has to dry up in the next few years because of depletion. It's not like a widget company, and you have depletion of about 4% a year. So to catch up with that, you need about, one Saudi Arabia has to be discovered almost every 2 or 3 years, is the way I look at it. So I look at it very simplistically like that.
But you think oil's going to continue to go down?
I think in the near term it will continue. I think will continue to go down unless there's some outside event, which could be, a crisis event. Something happens to curtail the supply of oil. But if that doesn't happen, I think, at least for the near term, oil prices will go lower. But that is not to say there won't be tremendous opportunity, because in 2 or 3 years, as you've seen in the past historically, at least in the past decade or two, that oil does bounce back. So I think it'll be a great opportunity to buy it. But I don't say, and I don't think anyone knows exactly when.
Right.
And so that's how I look at it.
Before we get started, check out our sponsor, chcadells.com. Get all of your survival and outdoor gear exclusively at CH Cadells. Check out their survival foods, watches, M48 Ops gear, and the LifeStraw personal water filter. That's chcadells.com. Always be prepared. Good morning, everybody. I'm Christopher Green. You're tuning into AMTV, Alternative Media Television. Good news, I don't have one of those pieces of paper on my neck anymore. I got a clean shave this morning and actually looked at myself in the mirror before I came on camera. Today is an interesting day because we have some major themes at work, and I'd like to discuss those themes with you, my audience. I was watching CNBC earlier this morning. Of course, the markets have been having trouble as of late because things aren't what they are cracked up to be. Again, all of this fake stimulus, all of these bailouts, 0% interest rates, the supposed end of QE in the States only to start QE in Europe isn't working so well. They've been selling the lie that this strengthening dollar, this just short-term blip in a long-term downtrend, although it could rally for a number of years, a long-term downtrend, short-term blip to the upside, they've been saying is a good thing, but is actually impacting multinational corporations especially, and their ability to make money, to make dollars, to make coin. We're seeing this affect earnings. We're seeing a lot of companies blame this on their earnings reports. We're seeing outliers from the technology field, companies like Amazon shooting double digits higher in the aftermarket yesterday at the close as kind of the exception to the rule. We see technology again as that exception to the rule, as the real economy continues to be on this downward trend, this downward spiral, this downward pressure. We also had some numbers come out of Europe. Germany is now experiencing deflation, not just the Eurozone itself. It's affecting really the entire region, not just the most hardest hit countries like the PIGS nations, Portugal, Italy, Ireland, Greece, Spain, etc., but even Angela Merkel's Germany. We're seeing the same thing here in the States. In fact, they had the print for GDP this morning, which was under 3%. I think it was 2.6%, so it was lower than what analysts had expected. They'll still argue was above trend growth. They say it's enough to continue lowering the fictitious unemployment rate, although they just have changed the rules on how they calculate that number. Everyone that gives up on trying to find jobs or work, they just take that out of the number like they don't exist anymore. We also have a major theme in oil. We have collapsing oil prices, which I believe are artificial. I think that have been engineered by the West, by the United States and our allies to put pressure on our enemies like Russia and Iran. I think the oil market is severely oversold at the moment. We're seeing Brent, we're seeing WTI test these new lows. Again, it's off nearly 60% since I believe last June. And I think we could see it trickle even lower, especially in the short run. I don't think we've had capitulation yet, although some could argue that we're starting to see some consolidation. So it wouldn't surprise me. I think oil could definitely go below $40 a barrel. We could even see 35. Once I get to 35, though, mentally, I would be surprised if it fell any lower. It could, but I would be surprised. So I think we're starting to see maybe a little bit of consolidation, but we'll see oil go probably a little bit lower, especially in the short run. Because that commodity is so severely oversold, I actually personally think there's opportunities that exist right now. You know, people always ask me, Chris, you're so negative. Where are the opportunities? Well, you know, we haven't had a sector in the economy hit this hard since the 2008 financial crisis, most specifically in the banking sector. We're kind of seeing the equivalent in oil. Although it's artificial, it's still very real. The facts are the market's severely oversold. I personally see an opportunity not just necessarily in the futures of oil, in the price of oil specifically. It's tough for the average investor to play that. The most common ETF, exchange traded fund, for example, is USO, which tracks the price of oil. But I don't really think that that's a good way for the retail investor, the regular John and Jane, to play upside in oil because of things like backwardation and the fact that they're buying forward future contracts, and that affects your rate of return month to month. In fact, you can lose 2% of your money every single month times 12 over a period of a year. You can see how you've lost significant wealth owning these types of ETFs. They're really just for traders, and they're for short-term gains. You have to have very specific timing in order to make money. I think a better way to play oil is look at some of the undervalued companies. For example, one that comes to mind is RIG. R-I-G is the stock ticker symbol, Transocean. It's a Swiss company. They're an offshore driller. They've been severely oversold. There's a lot of institutional ownership. I believe it trades around $15 a share. Billionaire Carl Icahn is one of the principal owners. He owns other companies like Apple and tends to do pretty well with his investments. Whether or not you dislike or like the guy, it's always important to know who are the major stakeholders and stockholders in the company. That's one opportunity that I see. That's a stock that I think could very likely double. Might not happen in the short run, but I think over a year or maybe even longer, you could see a double, maybe even a triple. Could be a home run. You could also look at companies, other companies in that area as a way to play a recovery in oil. Another offshore driller I'm a little bit less familiar with, but a lot of analysts that I respect seem to be bullish on is Seadrill. So these are other companies that I think could do very well in the future as things kind of shake out in this oversold oil market. The other major theme is because of this oversold market, because there's so much pressure being put on Russia, Vladimir Putin, the ruble actually hit, I believe, 70 rubles to the dollar today. I think that's an all-time high here in this intermediate period. Of course, the central bank of Russia had risen interest rates to around, I think, 17.5% to try to shock the decline in the ruble versus the dollar. But they since made another extraordinary move today, taking it back down to 15%. Of course, GDP growth forecasted in Russia is somewhere, I think, between like -4% and 5% next year. All of this having to do not because the Russian economy isn't necessarily strong. They're not well diversified. They depend on oil way too much. And, Putin needs to diversify Russia. He needs to diversify their economy. That's a problem he has to deal with. But it's not that Russia isn't necessarily strong. It's all of this artificial manipulation being pushed by the Federal Reserve here in the United States, the Eurozone, the ECB, this artificial decline in oil prices that is really putting pressure on Putin. It's forcing him into a corner. So I get a lot of emails. In fact, I got an email from a a kid. I call him a kid, but I guess he's kind of an adult in high school. I said, Christopher, I love your show, and I want to do a report on Russia and this reinvigoration of the new Cold War and the new World War and what you think is going to happen. I mean, how do you think that Vladimir Putin bites back? How does the angry vodka-drinking bear respond to the West? Well, I think, the simple answer to that is that I think we see tensions in Ukraine increase, especially as we move into the spring. As the weather gets warmer, we're already starting to see this. In fact, Europe didn't increase sanctions yesterday, but they decided to extend sanctions, I believe, till September of this year. So I think one principal thing that Putin will probably do is escalate those tensions. Now, of course, the mainstream bullshit Western media will tell you that Putin annexed Crimea, that he annexed Sevastopol, where his Black Sea Fleet. None of that is true. The Crimean people, eastern Ukraine, voted through a democratically elected system of government to join Russia. They virtually seceded. They weren't annexed. They chose to join Mother Russia, which again, this is a very strategic waypoint for Russia, not just for their navy, but for the transfer of petroleum-related products, also natural gas, which they're now bypassing the Ukraine and moving through Turkey. So I also think Russia, major theme, I think Russia's severely undersold. I agree with Jim Rogers, who I think is a very smart investor. He's famous for his for making millions, hundreds of millions, if not billions of dollars in commodities, is actually very bullish Russia. I would actually agree with that. I think they're severely undersold. I mean, if you look at the Russian market, for example, compared to the S&P 500, I think that Russia is trading at a PE of roughly 6 or 7, something in that range, compared to the United States at 16 to 17. Again, I spoke of this a few days ago. The S&P 500 is at, its PE is at a 10-year high. I mean, absolutely unbelievable, supposedly coming off what many have called the greatest of Great Depressions. So you compare that to Russia at 6 or 7, there's obviously very short-term, violent volatility in that part of the world, but I think it's severely oversold. I think over the long haul, Russia will do very well, especially as the BRICS nations, China, one of its key allies, move away from the petrodollar. This is all a part of the strategy, and this is the war that they're really fighting. This is the war that Washington isn't really going to expose to the people. They're not really going to tell you this is why we're at war. They're at war with Russia because Russia, honestly, fiscally, they don't have a lot of debt either. They've got a pretty healthy balance sheet. They've got $400 billion, I believe, in currency reserves. They've used some of that to try to backstop the fall of the ruble in recent months. But it's a strong, healthy country. It's not the United States. The United States isn't what it used to be. We don't have a strong fundamental backbone economically anymore. All of our manufacturing has been outsourced overseas. We're just riding the hot air of debt. That's the program in the States, of super leverage, of a multi-quadrillion derivative markets. Again, I've spoken about this for a very long time in very great detail. So we have the major themes at work here. We have this war between the East and the West, and I only expect that to amplify in the coming months. I expect deflation to be a principal concern of the Fed, principal concern of the Eurozone. That's why I think Bill Gates is using it as an opportunity, for example, to declare and hope and try to engineer a new world order, something that people said was a conspiracy theory, said you were a conspiracy nut. If you would accuse people like Bill Gates of trying to promote that several years ago, now is a reality. Also, we have the rise of machines. This is a very major theme. The rise of AI, artificial intelligence. Everyone from Tesla's Elon Musk to now even Bill Gates, Stephen Hawking warn that is the greatest threat right now, is the rise of the machines. Whether or not you take a Hollywood look at it and you cite movies like Terminator 2 or The Matrix, using humans to basically put them in an artificial reality and use them as energy. I don't know if it ever gets quite that Orwellian. But I would agree that it's an incredibly dangerous situation that we're moving into, and that we have to monitor it. I would actually agree with these billionaires that it is a very big risk that I don't think a lot of people understand. What Ray Kurzweil talks about at Google, I think, is an egomaniac in his own right. He says that we're going to reach a singularity at some point where the machines virtually take over. Their artificial intelligence will begin to think for themselves. It'll eclipse human thought, basically the human mind. They will begin to replicate, etc. And all of this will diverge from the current reality as we once knew it, and there'll be this parabolic shift. All of that is possible, but on the other flip side of it, on the other hand, I have trouble believing that kind of stratospheric honky talk when they can't find a simple cure for male pattern baldness, for example, or they can't stop things like cancer that's been killing people for ages. The best thing they can do is put you on chemo, destroy your bad cells and your good cells. Yet they're talking about this technological revolution. So I don't know if we get there quite as cleanly, as happily, and as speedily as these people think. I mean, I would actually more agree probably with Albert Einstein saying that, you know, we might fight World War III, but World War IV, I'm probably paraphrasing or screwing up his quote a little bit, will be fought, you know, with sticks and stones, not nukes. And I think that might be more of our reality, you know, suffering the consequences of all these bailouts, all of this stimulus, the evidence pointing to the fact that we actually have a deflationary environment, something that we tried to fight desperately during the Great Depression and lasted over a decade before America had recovered. But the problem is, we're not allowing the recovery here in America or in Europe. We're not allowing market forces to work themselves out. We're not allowing the market to fall. We're not allowing ourselves to clean up our balance sheet, to restructure, to reorganize the debt, so to speak. We're not allowing any of this to happen. We're only compounding an existing problem. And it's why it will end in collapse. I know it's a very negative view of the world. It sounds like a lot of negativity to people, but it's just reality. I mean, these are just the facts. At some point, the American people are going to pay the piper. So are Europeans. So will the global economy. And I think likely this is being engineered for a reason by the global elite, because they want to push to a new world order, just like Bill Gates says. Again, this isn't coming from my mouth anymore. This is coming from the people, again, that said you were a conspiracy theorist if you'd accuse them of this in the past, are now speaking openly about this in Davos, Switzerland. They're looking for global integration. They are helping to engineer the wealth transfer before global economies shift to an entire new platform, to an entire new existence, with technology at the forefront. You know, technology, I personally think, is still one of the bright spots in the economy. I think it has largely and will continue to diverge from the rest of the economy. You know, look at the numbers that Amazon just printed. Look at social media companies. Twitter, I think they're going to figure it out. I know Wall Street has been very pessimistic on them as a company. I think Twitter is going to figure it out. In fact, they're rolling out video now, which I'm actually probably going to start doing too, because it's a great way to reach you, my audience, with 10-second videos that I can put out on Twitter. They've also enlisted private chat and direct messages now, which I think is a really good idea. So, you know, technology, I think, will continue to diverge, will continue to be a bright spot. I'm bullish on it. And, you know, I think sometimes there's a misconception that I'm a pessimist when actually the opposite is true. I'm actually very optimistic for the future, but I'm also a realist. And I'm going to point out the scum-doggery of these people. I'm going to point out these criminals for who they are. Many of these people on Wall Street should be in jail. They all walk free. Many of these bankers should be in jail for what they did and implemented during and throughout the 2008-2009 crisis. We need to restructure. We need real change, not just artificial change. And I think the American people will wake up to it, but it's going to take a lot more pain before there's any change implemented in a very material, real way. I'm Christopher Green. Enjoy your Friday. Enjoy the weekend. If you're into the Super Bowl and that kind of thing, you know, enjoy it. You know, take it for what it is. But you know, also understand that we're moving into a very dangerous period, not just American history, but around the world. Get it out everywhere. Make it viral, hard hitting it in your face. Again, I'm Christopher Green, and click the link below to support our sponsor.